Hello, everyone, and welcome to this live streaming for the U.S. Jobs Report. To start with, can you please just let me know if the sound is okay, and also if the screens, you can see the screen. It's not the screen. It's just the image is fine. So can you just let me know so we can actually start with our live stream 30 minutes ahead of the US jobs report. So I'll be waiting. We will start in just a few minutes. Just let me know if the sound is okay so we can go ahead and start. All right, there's no screen yet. It's just a picture of me, and it says live streaming or live streaming FBS. But since the sound is okay, and I'm guessing everything is good. What's wrong with this? There's no screen need. There's no screen. It's just sound. So if the sound is okay, I think we will be starting talking about how long would this webinar last. I'm saying between 45 minutes and an hour tops. It depends on the market, especially that with all the with everything's happening in the States. So don't think this is going to last for a long time, probably because we might not actually see any kind of like that big move ahead of the weekend. That's number one. Number two, the developments in the US is actually kind of accelerating, and it looks like we have a lot of developments coming up in the next few hours. Right now, we have a breaking news also from the states: Democrats eyeing impeachment vote as early as mid next week. So Democrats is trying to impeach Trump 13 days ahead of the the end of his term. I guess the majority here is saying that the sound is okay, so we will actually start and talking about today's live stream. Okay, we have 25 minutes ahead of the U.S. jobs report today, which is going to be an interesting report, especially that after what happened over the past few days or yesterday in the U.S., especially after the Congress also certified the elections results for Joe Biden to be the next U.S. President after multiple weeks of denial from the Trump's administration. But regardless, what we actually care about is what we are going to do today. We hear you perfectly from South Africa, Limpopo, Landmark. Welcome from South Africa. Good sound. Please take us through. Okay. So today is it's going to be. It's hard to say what's going to happen actually today because of the political developments in the states, and as everybody saw on TV a few hours ago, or at least yesterday, a lot of things happened actually in the States, and it looks like we are still going to see more and more developments in the States, which will actually keep its effect on the markets. Regardless, let's start from a look at what we are actually expecting. First of all, let's look at the dollar index chart. Let's change and send you. I'm guessing now you can see my screen on the screen. Now you can see my screens and some CGs and some more ticker down. So if the screen is good, please let me know. We don't have any active trades right now. All right. So is the screen is good? Can you see my chart? All right. So here's the thing, that what I'm actually watching right now, at least in the dollar index, before we look into the numbers that we're waiting for. So for the past few months, the dollar index kept on declining slightly, or maybe not slightly, but trending lower because of the Federal Reserve decision, or the Federal Reserve policies of the QE, and it looks like we're going to see more and more QEs from the Federal Reserve over the next few months because of the situation in the States and around the world with the second wave of the coronavirus and the second, or the new variant of COVID-19, which is, according to multiple research, is saying that it's even more and more effective and more dangerous and more infectious, maybe. So today we saw some sort of a retest of the 1 or the 90 resistance area, which is, the 90 points on the index. And the dollar index has been trying to break above that resistance multiple times. And even though right now we're actually above, or out of the downtrending channel on the daily chart, yet I still believe any kind of upside retracement in gold is likely to be very, 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 very limited because of the Federal Reserve policies with more and more quantitative easing over the past few months, and likely for the next also few months, which is unlikely to see any kind of tapering or changing in the policies anytime soon. With that being said, let's just go and have a look at what we are waiting for today. Today is the US jobs report, and here are the numbers that we will be watching. A lot of you basically, or most of the time, just they look at three numbers, which is the how many jobs or how many new jobs has been created. That's number one, and you guys look for the unemployment rate, and at the same time look for the average hourly earnings. Those are the main three numbers that everybody looks at. However, despite that, there are multiple numbers that you need to keep an eye on. It's not only three numbers, it's over let's say 1, 2, 3, 4, 5, 6, 7, 8, 9, yeah, maybe 9 numbers that we need to keep an eye on and see which one or how or what's the overall data, whether if it's good or if it's down, and we will see the numbers once they are actually out on the screen, as you can see it here. So estimates showing that the US economy actually added only 50,000 new jobs in December, and I would not be actually surprised if the numbers comes in negative, means that the US actually, or the US economy. I will answer all your questions one by one once I just finish the what we were talking about just a little bit, and we'll answer all your questions just one by one. Just give me just 5 to 10 minutes to finish what I want to talk about first, and then I'll answer all your questions. Okay? So despite the fact that estimates are pointing to just only 50,000, I would not be surprised if actually the U.S. Economy loses jobs in December. I was in the U.S. during December, throughout December. I just came back to Abu Dhabi just a few days ago, and I can tell you that things are actually not as good as it looks on TV or from the news. That's number one. Number two, um, a few days ago we had the private sector numbers, which came in with a surprise. The ADP non-farm employment change. That's another thing. The private sector showed a surprise decline in jobs for the first time since April of last year, which is kind of a big indication of what the non-farm payroll might actually brings to us today. So the private sector lost over 123,000 new jobs, which means that even during December, during the holiday season, which usually we see a lot of temporary hiring because of the high demand. It's like high demand because of the holidays, and there's a lot of temporary hiring because of the high demand on shopping because of the holidays. But this time it was actually different. The private sector lost over 100,000 new jobs. So the change in non-farm payrolls is expected to add around 50,000. I would not be surprised if we actually get this number as a negative number, which means that the U.S. economy actually loses jobs or lost jobs in December. We'll wait and see. The 2-month payroll net revision, I wouldn't be looking at it that much because most likely we're not going to see that big much of a change. Private sector, again, as I said, that's already known. Probably we will see also a negative number. Manufacturing is expected to add around 15,000 new jobs. And by the way, the manufacturing sector had a very bad hit over the past 2 months from COVID-19 also. So that's also another thing. We also look at the unemployment rate is expected to rise again, 6.8. That shouldn't be also any kind of surprise too, given the fact that for the past few months also again like slowing down in the U.S. economy and COVID-19 hitting again. There's a lot of businesses are closing one more time or again at least. And with the despite the fact that the U.S. also announced the COVID-19 relief package, it is definitely not expected to help these businesses for a long time. So it still looks like we are heading into a double-dip recession. Yesterday, one of the Federal Reserve members said that he actually expects the U.S. economy to post a negative GDP number in Q1 of this year. So that's still another thing. Average hourly earnings or the wages growth is expected to rise by 0.2% in December. But at the same time, what the Federal Reserve keeps an eye on is the year-over-year data more than month-over-month data. The year-over-year is expected to rise by 4.5, which might be the only thing that might actually help the dollar today is the average earning or the average hourly earnings on year-over-year. Month-over-month is expected to rise by 0.2%, but that's also slowing down compared to November's data. And the participation rate is expected to remain stable, 61.5, and the unemployment rate on the longer term is still at 12%. These are the numbers that we'll be watching over the next few hours. So there are multiple scenarios that we will be seeing today. Some numbers might be good, some numbers might be bad, and I hope that we would get a very clear number. Means either everything is good or everything is bad, and I don't like to see some numbers good, some numbers bad. This would actually kind of makes it hard to see or makes it hard to predict which number the market will actually keep an eye on. But most of the time, like whenever whenever if there is kind of a mix in the data, the average hourly earnings year over year would be the main thing to keep an eye on. So that's from a fundamental point of view. We have 15 minutes until the numbers comes out, so let's just head and take a look at some technicals. So the dollar index yesterday again, and because of what's happening in the States, that's why we've seen some sort of a rally or slight kind of a slight rally over just for the past 2 days, and especially yesterday. But today we tested the 90, and one more time like another kind of a trimming of these gains. So far we're trading at 89.88, and again, as I said, I hope that we can see clear, or we can get clear numbers, either very bad numbers or very good numbers, which will give us the main idea. But at the same time, I don't want any of you guys to just react to the data as soon as they are out, because this is the most it's very wrong, and it's not actually advisable to just react to the numbers once they are out. Just take a breath, read the numbers, and then we will see what decision we will take. Okay. Hopefully we will stay beyond 5 p.m. Beyond 6 p.m. But you never know. We might actually stay until just like 30 minutes after the news, or maybe 15 minutes. It depends on the reaction, and it depends on the numbers. Okay, so that's the dollar index. For the time being, it looks like we might see actually kind of a push higher, but we will wait for the numbers first, and then we will see what happens. Especially, again, that most of the technical indicators over the past few months has been like already heavily oversold, and considering what's happening in the States right now, and Trump might get impeached, even though it's only 13 days ahead of the inauguration of Joe Biden, such events might actually lead everybody to go back into gold, into the U.S. dollar as a safe haven, because of the fears of what might actually happen from Trump supporters after. So that's that. Okay, let's just have a look at also some other assets. Let's look at gold, which there's a lot of questions about gold. Okay, gold, basically what happens over the past few days, or for the past 3 days, and one of the most important things that you have to keep an eye on is the 10-year Treasury yields in the States. And that's one of the reasons why we saw the decline in gold today, yesterday, and the day before. Basically, the 10-year yields in the States, which is the Treasury yields, which is the USGG 10, not 19, 10. It went back up above 1% for the first time since March of last year. This is a big deal, okay? This is a big deal for the 10-year Treasury years, but that's why, or one of the reasons why, gold went back down. And since we've seen some sort of a stabilization above the 1%, that is a very negative signal for gold. Yesterday we went all the way down just to the 1910. It held for 2 days. The time frame is just for it's daily. That's what I like. And then today, at the beginning of the European session, we also declined all the way back down. And if you're following our Arabic reports, we already sent out the signal to short gold earlier this morning. But in the next few hours, or at least when the numbers comes out, that's when we will be deciding whether to stay in kind of like a short position, or just wait, or maybe even buy gold once again. On the longer term, gold does still have a lot to do to the upside. I still believe this year, 2021, we will get above 2,400, 2,300, somewhere around that. That's what we actually think about gold, at least for this year. So that's whoever asked about gold. The next support area for gold right now, at least, we're talking about 1870, which is the 50-day moving average on the daily chart. But so far, it looks like we might see more and more declining gold in the next few hours and the next few days. Also, we can see there's this area here is very significant because it's the 50-day moving average, former support area that actually held since September, kind of, and we're out of the upside channel. So it's kind of complex right now, but at the same time, I would still wait for the numbers, read the numbers first, and then we'll decide what we will do. Let's head back to some currencies. The euro. The euro has the same thing. Over the past few days, we were or since October until today, or until yesterday, we're trading within an upside channel on the daily chart, and we reached all the way up to 23.50. However, it failed to do so, or it failed to stabilize on the daily chart. And yesterday we had kind of a breakthrough that support. And even if you look at, I mean, the channels might not be that perfect sometimes, but even when you look at the same channel but in a different way, or if you want to take it this way, or if you want to do like a parallel another channel, both ways it shows that we have a break of the upside channel. What does that mean? It means that we might actually look for more and more declines in the euro, and this basically, or this is also supported by the technical indicators. RSI was heavily overbought since November. We haven't seen that much of a retracement, but at the same time now, we're trending slightly lower. And the RSI on the daily chart, it is still showing trending lower slowly. And I would like to see at least a retest of the 50. So we have still 7 points here. And the 7 points in the RSI means that we might actually be testing the 122 and even the 120, 2150. That's also possible. But again, for the time being, I'm out of the market. I don't have any kind of positions in FX. I have some stocks, but in FX, I don't have anything until the numbers comes out, and then we'll decide what we will do. So that's for the euro. We still have 5 minutes until the numbers comes out, or the 4 minutes until the numbers comes out. The British pound has the same scenario. We are within an upside channel since October. We tried to break above that channel multiple times and we failed. For the past few days, it's been going like lower lows and higher lows, and so far we're still trading above 35.50. But we'll have to wait and see today how the reaction will be first. But I think we might actually be able to short the British pound also today if we find a very good area to log in through. So I will let you know if I'm going to enter or if I'm not going to enter. So I'll keep you posted throughout along the way. Just one second. There we go. Yeah, there might be a possibility of kind of a short in the British pound. However, it's kind of yeah, that will be far away if we wouldn't do that, but we shall see. Anyway, that's the latest low. Okay, let's see where we can, if that's possible. Actually, we should be shorting the British pound here. Anyway, okay. Let's just we have like 2 minutes left, if not less than that. So let's just head to Eco. So you will be able to see the numbers once they are out. We're like an hour and 10 seconds away. So we'll not be able to answer all your questions right now. So let's just see where the number is gonna, what the numbers are, and then we'll see what we will do. And if I have any trades, you will see them on the screen. There's the 1 second. Let me show you which ones. Oh, I don't have it in here. Anyway. Oh, yeah, I do. So if there's any trade, You'll see it on the chart in this yellow CG, if that's possible, a yellow headline. So keep an eye on the screen so you can figure out what we will do. And I'll, of course, going to say it if we will be shorting or buying or whatever, but it's going to be on the screen. Okay, U.S. equities today also, so far the futures are still up across the board. Nasdaq is up 2.5. I wouldn't be surprised if we see like more and more upside in the next few weeks because of COVID-19. But 1 second to the numbers. Here we go. Okay, we lost 140,000 jobs. The U.S. just lost 140,000 jobs in December. That's against the market expectations. And 1 second, let me see that. December, yeah. Just give me a second and I'll be right with you. Just read through the numbers. Also, even the private sector lost 95,000. Manufacturing is up by 38,000. Unemployment rate is still stable, 6.7. Our average hourly earnings is way higher, like 0.8%. That's kind of a record high too. And even on the year over year, that might actually push the dollar higher, even though that the U.S. lost 140,000. All right, but here's the thing: unemployment rate unchanged at 6.7. But the average hourly earnings, again, earnings are higher. So that's one thing why you're looking, if you are looking, oh, sorry, G2, if we're looking at, yeah, okay, let's have a look at the euro again, because we might actually look into it. Because average hourly earnings on both sides, the monthly and the yearly, is much better than expected. That's one thing that the Federal Reserve will be looking at more than the jobs. More than the jobs number. That's why the dollar is not down, even though, despite the negative numbers from losing jobs, but the dollar is still up. And if you're asking why, it's because of the average hourly earnings. So that's one thing, but hold on and do not react to the numbers. So that's one thing. The euro is also still within. Let's do that. 1 sec. 16, 9. It shouldn't be that bad. I mean, it's bad that the economy lost 140, but average hourly earnings is very high. Let's do G3 and see how high is that average hourly earnings. That's month over month. Yeah, look at that. I mean, forget about this spike here during COVID, but that would be another on record. Maybe since 2008, we haven't seen this number on month over month. Year over year, it is also very high. Also, forget about COVID spikes, but that will be another record number, 5.1%. Therefore, I'm going to lean toward the dollar more than selling it, despite the decline in jobs. So let's go back to G2. That's number one. Sterling, yes, we might. Okay, you know what? Who cares? Let's do that. Let's go G2. Let's just take a deep breath. So that's number one. The euro, even the yen, still the same. Nothing much of okay. Yeah, hold on. Just take a deep breath. We don't need to. FX only for today. Yes, FX only for today. stocks we don't cover that much. I cover on my own, but not that much with FBS. We have like just selective amount of stocks. But I'm keeping an eye on the British pound for a short, at least for the next time, which is 22.45. And I'll let you know once I actually get there, or if I'm going to actually short it, but that's already there. The euro also the same thing, 22.50. Aussie, Kiwi, that's not a big deal. Aussie is okay, Kiwi is okay. Okay. Yeah, the euro still, yeah, just, well, you don't need to, again, you don't need to react to the numbers that quickly. Because again, we might not be able even to trade any. It all depends on how the market's going to react. But so far, we haven't seen that much of a decline in the US dollar despite the negative numbers. But if you look, again, if we look at the numbers one more time, just real quick, eco. Let's have a look at it this way. So negative number when it comes to non-farm payrolls or the jobs report, the economy lost 140, and also the private sector lost at 95. So that's almost 200 and something thousand. But the good thing, we have an upside revision of 135,000 from the previous 2 months. We have manufacturing up big, 38,000. Unemployment did not go down that much, or did not even go down. Much better than expected in average hourly earnings. So mostly I would say positive, more than negative. Even the long-term unemployment rate is down to 11.7. So regardless of losing jobs, the majority of the numbers are not as bad as I thought. And therefore, we might actually buy the dollar again. But we will wait just a little bit more. And we might not actually take any trades, who knows, but we'll see. But so far, I don't see any kind of big reaction, whether in the euro or even in. Hold on a second. Any Trump businesses taking off or losing? I mean, he's losing big time, man. Come on. You already know that. We might see him getting impeached. So we don't know actually how this is going to unfold. Anyway, let's go back to some charts and see if we will be able to do anything. The euro held one more time. Canadian, we have even gold is 1880. So I would still leaning toward buying the dollar, not even selling it. There you go, Cole Bryan. The House of Representatives might impeach Trump within 6 to 7 days. So that's kind of a tricky now. It's going to be very tricky because of the news that coming out of the States the day after what happened in the Congress. impeaching Trump, that's kind of bad. Gold is not up, no, because the 10-year yield is still 108, even higher, like after the numbers. And I mean, don't ask me if you want to sell gold here, because definitely not, because it's 1877, and I wouldn't actually sell anything when it's at session low. But yeah, I mean, now we're having the news from Democrats about impeaching Trump in 6 to 7 days, and negative data from. Okay, here's what we will do. We will long the British pound at market. Oh no, sorry. 15, that would work too. But it's going to be kind of a tight stop. 36.11. I'm going to buy some British pound 35 market. 35. Sorry, 36.10. But we will have to be very fast. 35, 36.10. Okay, 36.10. I'm going to buy the British pound market 36.10. Okay, 36.10. I'm going to buy, or I'm already in 36.10. The British pound buy. I'm going to post it on the screen if you want to read it, or if you don't, if you would like to read it on the screen. 36.10. I'm going to buy the British pound. $36.10 with stop loss at 1.35. 75. That would be our stop. All right, there you go. You have it on the screen. Where's it? Yellow breaking news. But our stop should not exceed the 35.60s, or I mean 35. Sorry, 35.75. That will be tops maximum, because again, impeachment is not actually a very good thing at all for the US dollar, at least. And even with losing more jobs, it's also kind of negative too. But anyway, if we look at the 15 minutes chart, it's still looking good. Daily, we're still holding 35.50, so that's what I am in right now. So I'm going to put it also on the screen. Where is it? English active signals. There you go. Where is it? Active signals English. No. Active trades. GBP USD for buy 136.10. We said, yeah. 36. And we wait. And if we want to reverse, we will reverse. All right, there we go. All right. Whoever took the British pound trade with us, can you? How many took this trade with us? The British pound. It is still 36.10 though. Here's the 13. Yeah, dollar is speeding lower. It is actually speeding lower down. Yeah, at 10. That's our entry. 36.10, 14. Let's put it on a short term so people will be able to see it. Here's 15 and 16. Okay. At the same time, our targets here for today would start as always. We take 25 pips. Once we hit 25 pips, we would close half of our position, and then we would wait. Here is the 20, so we have 10 already in. Is it 20? Keep going. I mean, I'd love to see the 35. Okay, great. We have a good note. Okay, but gold. Do not sell gold when it's at the lows, man. Don't sell gold when it's at the low. A few days ago, it was $100 higher, so no. Okay, here's 23. Here's 36.23. At 30, you're okay to close half of your trade. At 30, 136.30, close half of your trade and let the rest ride maybe until the end of the session. That should be fine. $22. All right, that's good. 50. 16. Never mind, it's okay. Anyway, well, that's the one that we'll take now. 36.18. 25 pips win. Okay, good one. Is it 20? But again, as I said, like once you get the 30, you're okay. You're okay to close half of your trade and let the rest run until the end of the session, and we should see where we go. But gold, again, do not ask me about selling gold because we don't sell at session lows, especially after the decline that we saw over the past few days. No. Okay? So let's also do first target at 1.35 or 36. 36, 30. There you go. Oh, sorry. There he goes. 24. $26. There you go. Almost there. Almost there. That is 20. We got the 26 and then, but it's okay. 4 pips less. Okay, we're 5 pips away anyway. I mean that's still not bad. 250 plus 150. Okay, I closed some of it, not half. I closed some of it, but just like a third of the position. But again, like 30, I'm gonna close the rest and keep the half until the end of the session until we see what's gonna happen. Okay. Okay. How many took that trade? You're late for the entry. If you're late, don't chase. If you're late, don't chase. And it might actually might take some sort of a break before the beginning of the US session. But yeah, we're already, it's 5:50. I profit from gold only. Okay, no, not bad. But just try as much as possible. Do not buy or sell something at record high or. Let's put the film on the screen better. All right, I guess. Look up. I think it's gonna be. Okay, well, I'm glad that you all guys took that trade. It wasn't that big of a trade anyway. um, No, no, no. Okay, guys. I'm gonna leave the stream open probably until again, like we will wait on what we have right now, and as it's on the screen, our take profit, first take profit 136.30. We will wait until the beginning of the US session to update on this trade. Hopefully that you guys took it. We're already in profit, but slight one anyway. Um, but for the time being, we will just keep it as it is. Our stop remains the same, no change in our stop. I'm gonna just keep it as it is, as it's on the screen. One spot 35.70. First target is 136.30. If it gets there, you close half of your trade and then uh, let it run until the end of the day. Possibly, I hope that we can get also to up to 136.70 maybe today. But until now, I guess we're just going to wait until the beginning of the US session, which is going to be in 30 minutes. So the stream will stay on, the stream will remains on with the same screen. And if you have any questions, you can leave it, excuse me, you can leave it down below in the comments. And once we get back to check on the trade, I can answer your questions. All right, sounds good. So I'll be back maybe in 30 minutes just to check on the trade. Stops remains the same, no change, and we'll see you guys in almost 30 minutes. All right. Hello, everybody who's still with us here. So we actually, the good thing is we reached our target, which is the uh, 3630, and we kept all the way back up to almost what 3636 before dumping back down, which is actually a good thing. Anyway, um, sorry for being late. I was supposed to be here like at the beginning of the US session, but anyway. We have the U.S. equities is basically down back to 31. Hope that everybody actually took profits um, where we mentioned also PCG. Oh wait, PCG. Oh, down. Sorry, PCG. Not much. Really. PCG is still good. Yeah, I hope that you guys took advantage of the trade that we put today. The British pound, even though that it's going back down, but the good thing was hit and run um, earlier today, and it's since it's Friday, there will be no more trades for today, or at least for this week. I guess that'll be enough for now. I mean, I don't know. We got 25 pips. That's the target for today, or for the week at least. So that will be it for this live coverage. At least we got something. At least we got like some profits out of the markets ahead of the weekend. And here we go. Also gold, 1855. That's actually dope. Let's AU 1855. Wow. And the 10-year yields is now 1.1. If you're looking to buy gold, that's actually a negative thing. A negative thing if you want to buy it. But don't sell gold right here. No matter what, I would not be shorting gold, at least at these levels. But we will be waiting for some sort of a retracement in the next 2 days or next week before going back down one more time. All right, and I guess we will just wrap it up for this week. And thank you all for coming to today's short session, even though that we had like a long break. But at least we still made some we still made some money there today, even though that it's just like 25 pips maybe before the crash. But better than nothing, I'm guessing. Okay, so we'll see you again. Well, 1 second. Sorry, I'll be with you. Just give me a second. Sorry, I had a phone call. Okay, so I think we'll wrap it up here for this week. Um, and we'll see you guys once again with another sessions or another live streaming sessions, not only for the NFP, but some other events or some other um, live streamings average. Okay, so thank you. Congrats to whoever joined us on this trade. It was just a quick kind of trade, and we'll see you guys all maybe